Hey everyone, welcome back to Corporate Decoder. Today, we're diving into the latest from EXAGEN Inc., and trust me, it's got a few twists and turns that are more exciting than your average medical diagnosis. Well, not really, but you get what I mean. We are looking at EXAGEN's report from March 2025. This is where they tell everyone how they did financially. It's like report card day for companies. So, who is EXAGEN? Well, they're a company that focuses on autoimmune testing. Think of diseases like lupus or rheumatoid arthritis. They help doctors figure out what's going on with patients through specialized lab tests. Let's jump into the meat of it, the financial results. This is where we see how much money they made, spent, and if they are making a profit. Thankfully, EXAGEN gives us a press release which makes it easier to get the highlights without drowning in paperwork. We can scroll over to that press release to see what they say. Okay, first up, revenue. For the fourth quarter of 2024, EXAGEN brought in $29.1 million. That's the total amount of money they made from selling their tests. Looking at the whole year, their revenue hit $114.7 million in 2024. That gives us a bigger picture of their overall sales performance throughout the year. They also mention their gross margin, which was 72%. That means that after subtracting the direct costs of providing their tests, they kept 72 cents of every dollar of revenue. That's a very solid number to maintain. However, it wasn't all good news. Their net loss for the quarter was $9.0 million. A net loss means they spent more money than they made overall, taking into account all their expenses. And for the full year 2024, the net loss ballooned to $40.8 million. So, while they're bringing in a good amount of revenue, they're still spending a lot more to keep the business running, leading to these losses. Now, let's peek at their cash situation. As of December 31, 2024, they had about $52.9 million in cash equivalents, and marketable securities. That's basically their safety net. The money they have on hand to cover expenses and invest in growth. The report states that they think they have enough cash to keep things running for at least the next year. That's reassuring because you don't want to see a company running out of money. One thing that stands out is their focus on managing expenses. They've been trying to cut costs in areas like research and development. This is where they work on new tests and improve existing ones, and also in sales and marketing, which is how they get the word out about their products. They put in place a restructuring plan to try and become profitable. This can involve anything from cutting jobs to streamlining processes. They're trying to make the company leaner and more efficient. On the bright side, the number of tests they performed increased by 9.3%, reaching 16,475 during the quarter. This suggests there's still strong demand for their services. However, the average price they got for each test went down. So even though they did more tests, they earned less money per test, which can hurt profitability. Looking ahead, EXAGEN has laid out its strategic priorities for 2025. They want to grow revenue and improve profit margins by cutting costs and focusing on their most promising products. They're aiming to expand their reach in existing markets. That means selling more tests to the same doctors and hospitals they already work with. EXAGEN is also exploring strategic collaborations. This could involve partnering with other companies or research institutions to develop new tests or expand into new markets. A major goal for EXAGEN is to keep innovating, developing, and launching new products and services to stay ahead of the curve. They are trying to show doctors how useful their tests are. This means doing studies and publishing data to prove that their tests help patients. Here's a dose of reality. EXAGEN operates in a very competitive market. They're up against other diagnostic testing companies, some of which are much bigger and have more resources. To succeed, EXAGEN needs to protect its intellectual property. That means making sure no one copies their tests and technology. New guidelines can change how doctors treat diseases, and if those guidelines don't recommend EXAGEN's tests, it could hurt their business. They need to make sure insurance companies and government programs will pay for their tests. If they don't get paid, they can't stay in business. Government audits are a constant concern. If they find something wrong, it could lead to fines or other penalties. EXAGEN relies on a few key suppliers for the materials they need to run their tests. If something happens to those suppliers, it could disrupt their operations. Their computer systems need to be secure. A cyber attack or data breach could be a disaster for the company. And finally, the report is signed off by Jeffrey G. Black, who is the Chief Financial Officer. It's his stamp of approval on the numbers. They also include all of this data in a special format called inline XBRL. This makes it easier for computers to read and analyze the data. Overall, EXAGEN presents a mixed picture. They're growing revenue, but they're still losing money. They have a good amount of cash on hand, but they need to manage their expenses better and navigate the many risks they face. On the plus side, EXAGEN has a good gross margin and a growing number of tests performed, suggesting there is strong demand for their services. However, the path to profitability isn't clear. The company needs to show that it can cut costs, secure favorable reimbursement policies, and protect itself from the increasing competition. So, where does that leave us? If EXAGEN can execute its strategic priorities for 2025, they might be able to turn things around. If not, they could face some tough challenges ahead. Thanks for watching. If you found this helpful, give us a like and subscribe for more deep dives into the world of corporate filings. What company should we decode next? Let us know in the comments.